First, let's get some breaking economic data. Just crossed. Rick Santelli has that for us. Rick.
Yes, and there's a lot of it. If we look at the factory orders, durable goods, let's start there. Factory orders for May, up 8.2%, up 8.2%. I have 5 years here. I don't have a higher number. That is a huge number, and that follows a slightly revised minus 3.7 that moves to minus 3.9. We started out the year in single digits. It certainly seems, though, this is telling us that all the trade pull forward may indeed be over. Now, let's look at transportation, because maybe this is just all aircrafts. And indeed, 8.2% drops down to, as expected, up 0.2. So we could see that aircraft really made the big difference there. And if we look at durable good orders, now all of these are May finals. So we replaced mid-month read, and that was 16.4% was the mid-month read. It remains there. And once again, in large part due to aircraft, up 0.5% if you strip out transportation, which remains exactly as it was mid-month, as does capital good orders, non-defense ex air. That's the core number, up 1.7. That is a really solid number. It remains. That would be the second best number of the year outside of January at 1.8. And if we look at shipments versus orders, it lost a tenth versus our mid-month read from 0.5% to 0.4. Now, it doesn't end there. Yes, we have ISM services. We saw S&P Global Services, 50.8 on the headline. 50.8, that would be the best since April when it was 51.6. If we look at the prices paid, we'd prefer this go down. It actually did. 68.9 expected, 68.7 in the rearview mirror. A very subtle drop. 67.5, that would be the smallest since April when it was 65.1. But last month at 68.7 still was a large number. That was the biggest since Nova of 22 on the prices paid front. If we look at new orders at 51.3, it pops back into expansion territory. And finally, let's look at employment, considering we had a pretty good employment report. This is a bit misleading. It moved from expansion 50.7 to the June read of 47.2 back underneath, and that would equal actually 46.2 in March. So you can see that's how we comp. We are definitely still looking, as Sarah pointed out, holding on to the gains of the better than expected jobs report. Yields are up, equities are up. And, of course, next week we're going to have supply 3s, 10s, and 30s. It's going to be a dynamic week after a shortened session this week for tomorrow's closure and today's early closes. Sarah, back to you, and happy Independence Day.